few months back, Nigeria government introduced the Nigeria Tax Act. It's not a new news again, and so much information has been being passed about the tax law. Now, I am going to be making my video now is going to be focusing on how this tax law affects the players in the music industries like artists, producers, label, digital operator, publishing house, distributor, irrespective of which part you are playing in the music industry. As long as you're in the music industry, I will advise you to watch this video because it will help you a lot. Now, under the Nigeria Tax Act, there are some provisions that is directly applicable to you as an artist or as a producer, as a label, as an actor in the music industry. Some provisions that are directly applicable to you that you should pay attention to now. The first one is the Value Added Tax Act. Now, value added tax is the tax you pay on the consumption of goods or services. Now, unlike before, that foreign platforms and licensors are allowed to operate their platform in Nigeria value added tax free. Now, streaming platforms such as Spotify, Apple Music, Boomplay, YouTube, name it, all these streaming platforms now are now being taxed 7.1% value added tax. So that means on royalty and subscriptions being consumed in Nigeria, they pay tax to the Nigerian government. Although what this means is that you as a subscriber to the channel, you have to pay more. You might be paying more for subscription. Let's wait till next year. So this does not end even if the company does not operate in Nigeria, if the company is not in Nigeria or is not registered in Nigeria, but operates in Nigeria through a platform or through an intermediary or through an agency, they will still be taxed. So their representative in Nigeria are expected to withhold the tax so that it can be remitted. Now, also, this extends to live streamings, like live streamings on YouTube, TikTok, Instagram, podcasters, advertisements or co-production deals, all of them. As long as it is involving a Nigerian talent or is being consumed in Nigeria, they are all vatable. It is not all that bad because for companies in Nigeria like artists, production company, producer, and all that, you can now recover your expenses on production on you spend on your production. For example, or no, let me say, you can now recover the money you spend or expenses you spend on gadgets, on your studio gadgets, renovation of your building, licensing, music session, mixing and mastering, marketing, promotion. For all the expenses you incur as a Nigerian label, artist, management, or so, you can now recover the value added tax you paid on it. All you just need to do is make sure you keep a proper receipt and record of your spendings. It's actually good. And then when you exportation of Nigerian music, streams, download, sync licensing, consumption outside Nigeria will remain zero rated. So what it means is that Nigeria artists and label is a way of recovering 100% of the value added tax they are paying in Nigeria for production when their music earns money in abroad. It's a nice cash flow. It's a systematic cash flow. It's a systematic cash flow for Nigerian if you know what you're doing. Now let's move to the Corporate Income Tax Act. Now, corporate income tax has to do with companies. So now small record labels, small companies, production companies, distribution companies, publishing companies in Nigeria, Nigerian companies that earn less than 100 million annually and their fixed assets is less than 250 million naira, you will not be paying tax. You are zero rated from tax. Although the corporate income tax used to be 30%, I think it has been dropped to around 20 to 25% now. But as long as you are not earning more than 100 million yearly, you will not be taxed, which is very, very good. So what it means is that independent artists, production company, label, and all these companies, small companies that are coming up, it is an opportunity for you to expand because you are tax free. But however, big record labels and international distribution companies that have branches in Nigeria must now report the money they earn worldwide, including the likes of YouTube, TikTok, Instagram, brand deals, merchandise, online courses, affiliate commission, any income you are earning that's streamlined from Nigeria now and internationally, you have to pay a 15% global minimum tax to Nigeria. Just the way I've said it, but for the smaller companies, you are exempted. Then we have the capital gain tax. Capital gain tax used to be 10% before, but now it is now 30%. And now the capital gain tax has now been extended to digital asset and catalog. Usually, capital gain tax relates to property and other services rendered, the profit you made on it. But now the tax has now extended to your digital assets. Now your digital assets include music catalog, publishing rights, mastering rights, digital or virtual assets, including NFT. So any transaction you are making on all these in any of these forms now, you'll be charged 30% tax instead of the former 10%. So what it means is that labels, investors now pay bigger proportion of tax on their earning. So, and also, if the sales happen outside Nigeria, for example, if you sell your catalog for a foreign company, the government can still tax the transaction if the asset that is being sold is connected to Nigeria. So it does not even include if the transaction is directly or is indirectly, or you are selling from a subordinate or intermediary or a third party, or even if you are selling a share of your company that owns Nigerian music rights, you'll be taxed capital gain tax of 30%. So what I'm trying to say is now is that artists, label, okay, for independent artists, let's see it this way. Independent artists, you might be paying double taxation because you might be paying your personal income tax and at the same time be paying capital gain tax. Now, this is when you need the service of a person who understands the tax system properly and a good lawyer. Then, just the way I've said it, small companies are protected and are exempted from this as long as they are not expected to pay the 30% tax, as long as they are earning less than 100 million. However, foreign another aspect, okay, let's go to another aspect of the tax is the significant economic presence. Now, what is focused on is that foreign producers, mixing engineers, A&R, labels, every companies will, even if they did not visit Nigeria now, they can be taxed because the significant economic presence that the Nigeria introduced, what it means for foreign collaborators that provide service in Nigeria for artists is that, I just give you examples like production company, mixing company, A&R, consulting company, management company, any other professional services you are rendering. Nigeria government will treat you like you are running your business in Nigeria as long as it has to do with Nigeria, is connected with Nigeria. Now, what it means is that foreign service provider, they can either choose to register in Nigeria formally, or any partner they are working with in Nigeria we have to withhold the tax that they are meant to pay to Nigeria whenever they are making payments and transaction with them. So what it means is that foreign companies, foreign collaborators that earn money from Nigeria artists will now pay tax for such. Now, from everything I have been saying so far now, what I'm just trying to let you know is that there's an advantage to it and there's disadvantage to it. The major disadvantage to it that I see is that the consumers in Nigeria will have to suffer the bulk of these taxes, especially the value-added taxes, because people that subscribe to this platform like Spotify, Apple Music, Boomplay, YouTube, they might be paying more for the premium services from next year. The possibility is high. They can't just escape that. But now, for Nigerian artists, production companies, distributors, and what have you, especially the small, medium ones, they can now get a refund for their value-added tax on production costs. Now, there is now a zero rating on exports and lower corporate income taxes, which will now make Nigeria company more competitive globally, which is very, very good. And another thing is that the industry, the entertainment industry, will be a little bit more formalized now, because there has to be structure and proper accounting. And what it will do for you is that when you're entering into any contracts now, or when you are tracking your revenue, there will be a more and a better structures than it will be. There will be a better structures, and when you want to deal with investors and banks, there will be proper accountability and projection of financial and all other forms of implications. Now, for artists or record label, producer, manager, publishing company, distributor, whatever you are doing, or investor in the Nigerian music industry now, this is the time for you to get yourself a proper tax consultant that understand the taxing system in Nigeria, that's also understand the entertainment industry, and also a lawyer. So you are getting a tax consultant and a lawyer that understand the entertainment industry, and at the same time understand the tax system, how it works. Then you need to set up a proper structure in order to track your revenue by all territory, so you can know when you will be you are not meant to pay tax, you are zero rated on taxation. Now, this is my own personal advice to you. I didn't input it in my keyword in my system. Try as much as possible to review every contract that you are into right now, especially those that are about to be terminated in the next year. Try to review your licensing, your distribution, your collaboration agreements. You need to renegotiate some of them in order to allow you to prepare yourself for the taxation and allocation of taxation. So